Hello guys, this is SyntheticGoddess. You're welcome to today's forex analysis, the weekly analysis. Today what we're going to be looking at is going to be volatility 301s, volatility 301s, and that is what I am going to be using for this week analysis. This is going to be this week analysis. All right, so volatility 301s. So I'm starting from the monthly time frame. There's not much information on the monthly time frame other than the market is in a downtrend. Basically, the market is in a downtrend. Basically, we broke a monthly low. So signifying to us that we are in a bearish move. Okay, so I just go to the weekly time frame and then see my last break of structure, and then my trend. Okay, basically on this particular time frame, it is very obvious we're in a downtrend. Right from this area, we've been in a downtrend. The downtrend started from here, obviously, and since the downtrend started from there, so where is the last break of market structure? My last break of market structure is going to be here. Last break of market structure is going to be here. Basically, the last break of market structure is here. All right, so since this is my last break of market structure, then I'm going to look at what POI the market used in continuing to the downside before giving me that last break of structure. So we had this as a liquidity. Very obvious. The market used this. Perhaps, yes, the market used this. So we are clearly in a downtrend from here. The market using a very valid POI to continue to the downside. So after this, I go to my daily time frame and then I look out for what the daily time frame is talking about. I look out for what the daily time frame is giving me. Perhaps we are in a downtrend on daily time frame also, but then we need to look carefully into this if this is not double top. Okay, yeah, this is not a double top. We had a good POI tested. With liquidity being taken. So since this was my last break of structure, I mark out a very valid POI on the daily time frame. I mark out my valid POI on the daily time frame. So here is my valid POI. Whenever the market breaks this, then I look out for something else. Once the market breaks this. And as you can see, when the market got to this particular area, which it's actually used, market used this FVG space here. We had an FVG tested over here and it used it to move to the downside, and meanwhile we broke this low, but then since we've not got into our POI, then we can't really talk about breaking of this low. So when market got to this particular place is still a very valid order block. We still had a very valid order block over here. Which the market tested. And remember, I am always saying, don't assume for the market. Wait for the market to display. Wait for the market to play out according to what it wants to do. Don't assume for the market. So, a lot of people would actually assume I am expecting this low to be taken. Since we've taken this low, I'm expecting and waiting for this low to be taken. The market can do otherwise. You cannot decide for the market. You don't assume for the market. Always wait for the market to play out And when you get to a supply or demand zone, a very valid supply and demand zone, wait for the market to see what it wants to do over there, and don't assume you are waiting for it to break a particular structure. So when we got to this particular low, we had a minor break of structure over here. All right, meanwhile over here it is just more like a double bottom. And remember what I said in my last chart pattern. In my last video, I spoke about chart pattern, that whenever the market wants to move, it displays three types of pattern. It's just based on you, for you to know what to do and what the market wants to do at that particular point. So we had a minor break of structure. And then we continued to the upside. And meanwhile, there is a very valid supply zone over here, of which market could actually use this one as just liquidity or inducement. It doesn't matter, and use the supply zone and continue to the downside. But then, since we did not break this low and we had the break of structure, we are actually bullish for that. We are still bullish for that. Since we did not break this low and then we have the break of structure, it simply means we are assuming. Remember, it is just an assumption, and we want to follow whatever pattern the market does. We want to follow whatever strategy the market wants to use. All right, so we didn't break this particular PO high, and we had the break of structure. We even broke the structure, so it simply means this high is not really safe. It's not really safe. Meanwhile, the market can get there and decide to do something else. Nobody further owns the market, so you just have to play according to what the market is doing, and you have to follow break of structures. So we had the minor break of structure over here. Then we moved to the upside. There was an untested supply zone over here, of which can only be seen on the lower time frame, maybe 4 hours time frame or something. We had a very valid supply zone over there. We had a minor break of structure on the lower time frame, but then where were we not expecting the market to break? We are not expecting the market to break this low, because this was the last break of structure to the upside. We had this high, we had this low before we now had this high. So we are not expecting the market to take this low. If the market takes this low, then we know that this low is not safe. This low also is not safe. We are kind of going to take it. So once we break this low, it simply means it's a break of structure, because we did not break the normal high, the external high. We did not break it. So the market came back here and respected the other block over here. We moved to the upside. We had this break of structure. We broke this high. Remember, we didn't break this high at first. So after breaking this high, we took this high. So but then we've not still really gotten to a valid supply zone. We've not gotten to our PO high that we marked out over here. We've not gotten to our PO high. So what do we do? Does that mean we are still looking for a buy move? Perhaps. Let's just look at this. So basically on this time frame, the last break of structure is to the upside. Basically on this time frame, the last break of structure is to the upside. So what does that imply? On the weekly time frame, we are in a downtrend. On the daily time frame, we are in an uptrend. So that's time frame contradicting each other. So you really need to follow the higher time frame. Basically on the higher time frame, we are still in a downtrend. On this daily time frame, this is also a higher time frame, but then we are contracting. The time frames are contradicting each other. So we moved to the upside, we broke this high. So if you are an intraday trader, we just go to the 4 hours time frame. We go to 4 hours time frame, and then we just check where is that low you are not expecting the market to take. Where is the low you are not expecting the market to take for your downtrend? Remember, we had this break of structure to the upside. This was our last break of structure to the upside. Other ones are just range structure. before a move to the upside. So this was the last valid area we had to the upside. So we are not really expecting the market to take this low. We are actually not expecting the market to take this low as minor structure, but we are not expecting market to take this low as minor structure. The overall place we are not expecting the market to take is this low, this particular low over here. We are not expecting the market to take it, meaning we have gotten to a full downtrend. So perhaps we are waiting that if the market takes this particular low, we are coming to this area. If market eventually takes this low, because this is going to be a minor break of structure over here. It's going to be a minor break of structure. So perhaps if the market doesn't take it, we are coming to this particular valid order block. So this is the minor low. We are not expecting the market to take. So once the market takes this minor low, we are just expecting a pullback to just move to around this place. But then the market can eventually still do whatever it wants. We just need to follow the structure. We could actually break this place, come here, and then continue to the upside. But then eventually we might not break this particular low. So what we are waiting for, if we do not break this low, is for the market to come to this PO high. Once it gets to this particular PO high, we wait for a minor break of structure, then we continue to the upside, since we know that on the daily time frame we are still in an uptrend and it has not gotten to a PO high. So what we are expecting the market to do is come to this PO high, come to this order block, come to this demand zone, and then give us a minor break of structure. Market getting to a PO high doesn't imply that you should just jump into the market anyhow. Market getting to PO high doesn't mean you should jump into the PO high anyhow. You need to wait for a confirmation before you jump into the market. So we wait for a confirmation that we are going to turn bullish for the meantime. So when we have a minor break of structure to the upside, we wait for a retest and wait to take this high. We wait for a retest and then we just wait to take this high. That is when we have a minor break of structure. Remember, when a market gets into PO high, doesn't imply you should jump into the market. You need to wait for a confirmation that we are moving forward. We just wait for a minor break of structure without breaking this low, and then move to the upside to take this high. So perhaps this moment we are looking for market to get to this demand zone and give us a minor break of structure to continue to the downside. And you can't really see the minor break of structure on the H4 time frame. You just need to stretch out your highs to H1. You need to stretch out your eyes to H1, 30 minutes, 15 minutes to see the minor break of structure, and then wait for a retest to move to the upside. So that is just it. So what we are expecting on this particular market is that we've marked out our PO high. We're expecting a minor break of structure to the upside to continue to move into our PO high. But then if you're someone that does not trade pullback, you have to be extremely patient for market to get to your PO high, give you a valid confirmation that it is going to move to the downside, because the market can also get here and then just give us a break of structure to continue moving to the upside. It doesn't matter. That is what the market can do. So you really need to wait for a confirmation at PO high. Market getting to PO high doesn't make you just jump into the market. You need a good confirmation to be able to continue the market, So once we get the market to this area, we wait for a good valid confirmation to move to the downside and take this low. But if it doesn't give us that confirmation, it simply means this high will be taken, and then we are going to seek for more buys. We'll seek for more buys. But currently, since the market structure we are seeing is still to the downside, so we've marked out our PO high. But if the market decides to violate that PO high, it simply means we are looking for more buys in the market to continue to the upside. So you just follow whatever the market does. So remember, our weekly time frame is downtrend, is a bearish move. Our weekly time frame is in a bearish move. We had a failed swing over here. This low didn't take this low, so it is a failed swing. So we might move forward to this PO high. Our daily time frame is in an uptrend. So if you trade pullback, then you're seeing a very good setup to continue to buy to PO high, of which you just wait for the H1 or 30 minutes to give you a minor break of structure. Wait for a retest. You have to be patient. To wait for a retest to get to this high. So let's just calculate some pips. So imagine the market giving you a retest at perhaps this area, and then you're targeting this high. This is 19 pips, which is still a very good number of pip to move. You understand? On lowest lot size, you're going to be getting $19. It's still a very, very good way with a very, very less risk. So you just have to manage your risk and then know what you're doing, following the structure. Follow the structure. The structure is king. Follow structure. It's going to really help a lot. And follow confirmation. Ensure you get confirmation before you enter into the market. So that is that for volatility. 300 1S index. That is all for the analysis. Thank you very much for watching the video, and keep living in the atmosphere of profit. Thank you.